All right, guys, ready for this? I don't see much interest, actually. That's more like it. Okay, so these are super powerful people who have invested in the ecosystem and are continuing to invest in the ecosystem and have knowledge of the investment landscape beyond Pakistan as well. So that's why we thought a conversation with them would be interesting, both from your point of view and also I think whenever they get together, they learn a lot from each other about what's going on. So Aatif, we'll start with you. So we're hearing a lot about an investment slowdown or shutdown. Is it happening or is it just negativity that is, part of what Pakistanis are going through right now?
Sure. So there is no shutdown. There's definitely a slowdown. I think that's real. We've all experienced it. And it's different, when 22, there was a global slowdown that happened in VC funding. That's recovered, in the US, but it's not equally distributed. So even in the US, if you're not an AI company, good luck, getting a VC meeting, because AI has sucked all the air out of the room. So that's the nature of, startup investing as well. Things go up, things go down, and different sectors and different geographies are in favor or out of favor at different time. So we continue to invest at Indus Valley Capital. We announced Shadiana's fundraise just last week.
Yeah.
And earlier this year, we invested in Uplift AI, which is a foundational voice AI company. Their seed round was $3.5 million. So between us, YC, and a bunch of other investors. But it's definitely much, much harder. And I think if you are a founder, you really have to take that into account when you are doing your planning. And that's what you've seen across the portfolio as well. We are seed investors, obviously we've seen the good times where a lot of follow-on capital were raised, but then our recent companies, they're so much more frugal when they do their planning. And I think that's also worked out quite well. You just need to be in charge of your own destiny and not at the mercy of, look, I need to raise in 6 months or I die.
Okay, just a follow-up question to that. Do you see companies in Pakistan actually focusing on AI and not just using AI as hype to say, oh yeah, we run an AI company?
Definitely. I mean, I think if you're not leveraging AI, as much as you can, it's not optional at this point, right? Like your competitors will, and they'll have higher efficiency than you. They will be able to do things that were not even possible. So for example, Uplift is a super interesting company because they build these voice foundational models in Urdu and other regional languages. So imagine if you are a bazaar, selling to Kiryana store, or Bridgelinks, which is a trucking marketplace. Previously, maybe it wasn't even possible to automate that interaction because of that language barrier. It had to be a human, and now you can. So we're seeing across the board, engineering teams definitely at the forefront. So they're adopting Cursor and others. And that's, resulting in this productivity. But then on the product side, you have to think as well. So for example, Maqsad, we have seen do it very well, where they build this conversational AI in-house, where starting from ads, when somebody clicks, that conversation happens through an AI, and then it gets handed over to human. So definitely seeing a lot of that, and I think it's essential at this stage.
That's good to know. Misbah, when you look at companies, you invest at I2I Ventures, invests at an earlier stage, right? Have you seen a lot of investment happening in that space? And has I2I been looking at new investments within Pakistan?
Yeah, thank you. We do invest at the early stage. As Kulsoom was saying earlier, my partner in the fund, when she was on the stage, that we do invest early in terms of pre-seed and seed stage. We are continuing to make investments. We have, I'll be honest, have made more follow-on investments in our existing portfolio companies in the last year or so than new companies.
Sure.
But we continue to look at the market, and we are looking to invest more. We are also coming up towards the end of this fund, and will look towards raising more funds in the near future. But I think what we're seeing is that there is activity at that early stage. A lot of early stage startups are not necessarily raising money. And I think to what Aatif said also, there is this general expectation that money is harder to get right now. And so we find that founders are working more towards the bootstrapping or even seed strapping, which is where you raise a small round and you make it go further. And you don't necessarily expect that you'll be coming back into the market to raise money again and again because capital is scarce in our market right now. And so what we're seeing is, yes, there are still some founders coming into market trying to raise. I think definitely fewer are raising than have done in years past. And at the same time, we're also seeing a deeper expectation of building a path to profitability rather than saying, let me get outside money or venture money and then grow the startup exponentially really quickly, as was happening in years of really high activity.
But does that mean, or does that indicate that less youngsters or founders are starting companies, or is it just that they're bootstrapping and being much more careful?
I think it's both. I actually also think that because of, I know Junaid earlier was talking about, how much tax a salaried class pays and all of that. There are people that are looking to maybe earn through dollarized revenue sources and maybe doing freelancing versus starting a company. There are people also who are thinking twice before they leave a job at Unilever or HBL and do their own startup because they may expect that the timing may not be right or that there may not be enough money available right now for early stage startups. So we are seeing fewer people sort of jumping into the space than before, but that doesn't mean that necessarily that that younger people don't have those options. They are still opting for it, but I do think it's a different time in terms of how much people are jumping in. But one thing I do want to say is that we talk a lot about startups. I think we also need to talk about the entrepreneurial ecosystem more broadly because people are starting companies. They may not be a typical tech startup, but it may be an SME or an MSME, which has the ability to grow into a thriving company. And I think in terms of entrepreneurial interest and focus, I don't think that's slowed down. I think people are still looking to build companies. People are still finding opportunities. They're being creative. But maybe the sort of hype that we saw in 21 and 20 around startups has actually slowed down.
But the difference would be that they wouldn't scale that fast.
Yes, but it'd also be stronger companies in some ways, right? They would be stronger in terms of even in our portfolio, we've seen companies that, have not gone after crazy growth, but had really said, how do we break even sooner? So if they had expected to break even in 3 years, now they're trying to break even in a year. Fintechs definitely are at top of that list. So I don't think it's that companies are okay, we're not going to grow or that they don't grow, but I just feel like the type of growth is a little bit different and it's more sustainable in some ways.
Sure. Faisal, Zain VC has been investing locally for quite a while. I think between Aatif and yourself, many of the investments have been made by both your organizations. But now you are looking outward, right? Is there a particular reason for that, and which are the markets that you are looking at?
Sure. So thank you for having me. I think venture capital has changed, or I guess it's rhyming more with an earlier cycle versus what we saw from 2008 to 2022. We went into the operational platform play. And one of the key drivers of super growth in that period was cost of capital. The US interest rate cycle pretty much drives the world. And we're heading into a period which is similar to 1945 to 1981, where you saw rates going up from 45. Sovereign debt level was very high. So the US did yield curve control on their bonds, which is you cap the bond yield. And then you basically keep raising rates for consumers. That obviously then leads to less capital being available to go into private investments. And so you're probably going to see that same thing play out. I mean, I'm not saying rates go straight up, but they go up, they go down, they keep going up on an upward trend. So that's going to change the type of capital that's available at a global level, in my opinion, because that drives it. The other thing that's happened is that we've moved from the non-tech founder, which is people like myself. I'm not a tech person. I understand tech conceptually, into deep tech. So tech founders are back in play. They understand nuances of machine-to-machine payments, integrations, versus just simply doing a grocery play and then adding a tech skin on it. So that's changed significantly. And obviously that comes in the AI and blockchain realm. And to me, blockchain and AI will scale together. They're intrinsically tied. So that, I think more investments are going to go there. Now, the reason why I'm looking, not necessarily outward, but at this point, borders are blurred once you go into the AI and blockchain realm. Not entirely. Obviously, there's local use cases, as Aatif identified earlier. But generally, you can. It's even when it comes down to, let's say, doing something in Pakistan in the AI realm. I almost do the analogy with when iOS and Android operating systems came about, and then you had this flurry of applications that people were developing, and so a lot of the AI, agentic AI, localized versions will find out that suddenly somebody else was working on it, on buying data in Pakistan, and working on it in Silicon Valley for the LLMs. So there's all sorts of risks that appear. So therefore, I think looking regionally or looking even globally, and again, I'm not going to compete with Sequoia and the big boys because you're not going to get the deal flow. So you have to basically go into blockchain specific things. That's we have access to, it's public. And then if you see local use cases of AI that really stand out, that's where I would probably invest going forward. But I think sometimes it's okay to take a step back and let the market settle a bit. One thing I will add at the tail end, the reason why, what we saw in 2021, I call the dot-com bubble for frontier market VC, which was all of us. I mean, we all raised our funds. It was really easy. I actually didn't realize that's difficult to raise money because in 2021, people were just handing you briefcases. So what's happened is that...
I'm glad you had that experience.
No, well, Aatif had better luck there than I did, right? But what I'll say is that, look, U.S. stock markets also are giving better returns than VC. I mean, if you invested in the stock market over the last 5 years, it's a highly liquid market. So that's also driving capital out. I can just keep money in my domestic market. I don't need to really go out on the risk curve to venture capital and private equity and become an LP. So that's contributing significantly. Family offices are tapped out. All of them overexposed in 2020, 2021. So they're still waiting for returns. We haven't had exits. So we have to start having exits and give money back. And then the other big factor is blockchain. Crypto is a highly liquid, high return asset class. That's also sucking up a lot of liquidity as well. So these are just the factors that I feel going forward we have to take into account.
Okay. Hisham, what's your experience in terms of how does Pakistan look right now compared to other emerging markets in terms of fundraising?
Yeah, so for those who are unfamiliar with Gobi, I would like to also think that we were as early as Aatif and Zain in the Pakistani ecosystem, just trying to take some credit there. But
no, you were.
So I come from Southeast Asia. Gobi has been around since 2002, mostly focused on Greater China and Southeast Asia. But 5 years ago, we looked across Asia Pac and we thought about where is the next great frontier? Where is the next place which is a bit short on capital, a bit early in its development, but had great tailwinds, macroeconomic and other, going for it. And so we looked to Pakistan. Originally, we partnered with Fatima, so we used to be called Fatima Gobi, but now we are simply known as Gobi Pakistan. And we come into the same issues that startups have here, is that when we go out to LPs and we sing the song of Pakistan and people look at us and say, oh, the macro or whatever, but what we see on the ground is very much different. I think everybody is going through a correction from 2021. Like Faisal said, frontier markets were hit harder. But as we see around the room today, and as I've seen kind of flying in and out of Pakistan and spending time with my team here, that people continue to build. And I think that this morning, people were talking about what are the challenges with macro, and yes, you cannot divorce yourself from the macro conditions that are here, but that doesn't mean that you cannot build a fantastic business based out of Lahore, based out of Karachi, based out of Islamabad, right? The talent here, we see a lot of similarities to Southeast Asia in terms of the demographics, in terms of the population size, but one advantage that Pakistan has over many other emerging countries. It has a highly, highly educated workforce, particularly in technology, and a very strong bilingual workforce. And this is something that has gotten us really excited. This is something that gives Pakistan the opportunity to actually build credibly in AI when other more developed emerging markets cannot. And so we look in perhaps with a different lens. We are always contrarian by nature. We're always early, sometimes perhaps too early in certain ecosystems. But it has proven out, we're here 400 companies later, $1.7 billion in AUM later, 75 exits, and we hope that Pakistan, and we know that Pakistan will be our next great market.
Great, that's great to hear. Tell me, are there any lessons that Pakistan can learn from other countries?
Yeah, I think that for young entrepreneurs, and this still happens in Southeast Asia, which is a little bit further developed in terms of the timeline than Pakistan, is that the excitement among fresh graduates or people just kind of coming out of a couple of years in corporate is they think the sexy thing is they want to build a startup, right? Because they look at Stripe, Airbnb, LinkedIn, and they think, okay, I want to build one of those, and they look at it for the wrong reasons. They look at it for the glamour, and they look at it for the hype and whatever misplaced social credibility may come with starting a startup. But for anybody who has ever started any sort of business, it is possibly the unsexiest experience you've ever had in your life. I think one person said that it's like staring into the abyss every day and eating glass. Or I think Reid Hoffman said it's like jumping off a cliff and building an airplane on the way down. Anybody with even a smidge of startup experience knows how incredibly difficult it is. You'll lose friends. Your family will hate you. And maybe you will come out on the other end with a nice exit or a profitable business. And so I think people need to reassess. They should maybe not look at startups first, look at entrepreneurship as a whole, because there are many types of businesses that you can build that will make you very successful, make you very fulfilled. But a startup doesn't have to be one of them. A startup is a path to hopefully accelerated growth, but it's also statistically a path to accelerated demise. And so you have to really see for yourself whether this is something that you want to spend the next 10 years of your life building. And don't look at an exit as the end of your journey. If you are lucky enough to IPO, that's just a milestone in the 10, 20-year growth of your company. You should look at it as money is great, but you should look at it as if you have been called to do it in spite of the money and in spite of the risks. And that might sound cheesy, but anybody who has ever faced that question in themselves will know that that is true, that starting any sort of business goes beyond the money, and you have to answer for yourself, is this the right path for you before you jump in for the next 5 or 10 years?
Aatif, so despite the tougher environment, are there any particular sectors that you feel optimistic about?
Yeah, so we are generally sector agnostic, and we look to founders to tell us, where the exciting opportunities are. I'll turn this around a bit into more advice for founders on how to think about. So when capital is hard to get, you want to get more differentiated about the kind of problems you work on.
Okay.
When it's cheap, of course, like everything can get funded, and you do that. So for example, right now, what's getting funded is either things that have a huge tailwind, AI being the top one. But a good example of that is also electrification of vehicles. So, no matter what happens with Pakistan's macro, next 5, 10 years, like all the 2-wheelers, 3-wheelers are going to get electric. Everybody gets it. You don't have to convince somebody on the basic thesis. So picking something like that is helpful. Or you can choose to work on problems that are going to have a very high return on capital. And that's something VCs also would appreciate, because sometimes when something is very ambitious, it requires, like, for example, quick commerce requires, hundreds of millions of dollars in capital. In India, it's worked out incredibly well. At some point in Pakistan, it will too, but it will require that investment before that happens. But in this environment, that's a very high-risk sector. But if you look at somebody like Kist Bazaar, what they are doing with making household essentials available on easy installments, it's a high return on capital business. They've been profitable every month, and they've been growing also very fast. Then that's the kind of business, we also like, but in general, it's easier to pitch to VCs, and you'll be able to raise both debt and venture capital funding for that. So that's sort of the framework you want to use, either a huge tailwind or high return on capital.
Okay. So understanding your market, understanding the needs of the market is the basic thing that you need to know.
Right.
Otherwise, don't try and solve a problem that doesn't need solving. Tell me, each one of you actually, the kind of companies that you have invested in, what are the main things that you looked at in those companies or in the founders that encourage you to put in the money despite the economic climate that exists? What is it that you looked for and found in Pakistani founders? You want to start? Yeah, use that one. I don't know why this
I
one's-
think I'll actually also touch upon the sector aspect. Like Aatif was saying, I think for us, even though we are also a sector agnostic fund, we have found that fintech and embedded finance has become a very exciting sector for us. It represents a large portion of our existing fund portfolio. Thank you. And it's also, and we also see that continuing. And I think the developments that are happening in Pakistan with regards to regulations, with regards to Rust, with regards to other things that are happening in the finance, access to finance space, and the fact that the majority of the population is still severely underbanked. Companies that we've invested in, like Uran, for example, that's doing not only Roskas and savings committees, but also savings towards gold now, and increasingly in bringing in financial access to women and underrepresented groups, is going to continue to do better. We have companies like Abhi in our portfolio, where not only have they acquired a microfinance bank, but they're also looking at how can that microfinance bank do things differently in the market. And that opportunity is there, whether it's banking as a service, which I think Kabir will talk about tomorrow, or whether it's talking about what is Abhi doing in terms of earned wage access and bringing financial products to people that have been out of that cycle so far. So I think Metric is also an example of a company that's building in the fintech space and leveraging AI really interestingly. So I think these are the areas where we're going to continue to see the space growing, and fintech as a segment is very broad with multiple verticals. So I think for us, even though we didn't jump in saying we're only going to do fintech or we're going to focus on fintech, I think that's happened over time, and I see that will continue to happen. So I think when we're looking at founders building in spaces, that's a space that continues to be exciting for us. On the founders themselves, I think one thing that's been consistent across all of our investments so far is that we look for founders that are visionaries but also grounded. It's this balance of do you have the ability to execute and attract a team, but are you also thinking big into the future? Are you curious by nature? Do you have the tenacity and grit? Ali earlier on this afternoon was talking about founders in Egypt, for example, and looking at tenacity and resilience. That goes for Pakistan as well. Those are very, very important traits if you're actually going to build in Pakistan. So I think those are some of the things we look for along with this big opportunity. I've said this before on this stage as well, is as broken as things are in Pakistan, the flip side of that is that there is so much opportunity to do things efficiently, to build for those gaps, and to actually bring access of products and services to people that don't have them. And the whole development of AI just makes that even more exciting. The access to blockchain and crypto makes it even more exciting. So those are some of the things that we have looked at and we'll continue to look at when we evaluate companies.
Any of you want to add to that, or are you happy with that?
I would say that I agree with Misbah. I think, to put it very simply, we look at, obviously everybody looks for great founders, although every VC says they love to back great founders, but it's actually really hard to tell. Unless the founder is a second or third time founder, it's actually quite hard to tell even after a series of meetings, whether that person is a good founder or not. But we try our best to back good founders. We look for founders who are doing something slightly different that gives them a right to win, something that their competitors can't or won't do, and that gives them the ability to potentially grow quickly with the right team and the right amount of capital. And the third is, of course, a large enough market where you can grow that idea through. And these don't have to be, again, these don't have to be sexy ideas. I'm going to give a shout out to one of our founders, Haider Reza from Dealcart. You know, third-time founder, building in probably the unsexiest sector there is, grocery delivery, in Pakistan, a country where unit economics tend to be a bit challenging for more physical startups. But the guy is crushing it. And I think that you can build a great startup in any sector if you have the right team and the right formula. And I think Haider is a perfect example of exactly the type of person that we are looking for. Because at the end of the day, this is a people business. Yes, we back great ideas, but they won't come to fruition without the visionary people behind them to bring them to reality.
So I'll add one thing, the founder market fit. So there is the absolute basis, you know, all the qualities everybody mentioned. That's very, very important. But specifically for some problems, you know, the founders, when they're perfectly suited to tackle that particular problem and solve for that market, I think that's when magic happens. So two examples of that. So one is, you know, for example, trucking is a very, very difficult space because it's operationally so complex. So you invest in bridge links, you know, the founder is just incredible. Somebody, you know, who are street smart, you know, they can solve problems on the ground in Pakistan. And the other example would be when the problem is very technical. So I mentioned EVs earlier for two-wheelers and three-wheelers. Very technical problem if you have to make a electric motorbike in Pakistan and a battery swapping network to go with it. And we've invested in Zip, you know, engineering founders, so two JK engineers, one NUST PhD, and ex-Microsoft, and working on this very hard problem. And I think like we found that that's been really, really important for us. And similarly on the technical side, if you want to do like a foundational AI startup, then, you know, somebody who is an engineer, has worked on related problems, that's super important. So Jams is a good example, ex-Meta folks, you know, this is Pakistani founders in the US. We invested in them in 2022, and OpenAI just acquired them. And one big aspect of acquiring the team was the product they built, but it was also the team that OpenAI really wanted.
Yeah, the team is extremely important. Faisal, you're expanding into GCC. So is there a particular reason? Do you see that there is a growing market there or a growing need? And, you know, the impression here is that a lot of the founders or software engineers are moving to GCC because there is a need for technical talent, but there is more money there for people to invest. Is that true?
It is true. I mean, obviously, there's going to be a brain drain, but I actually think that's an asset. Because if you look at India, a lot of their individuals that went abroad eventually brought knowledge, came back, and all of us are doing the same thing to some extent. So I think it eventually turns into an asset. Expansion abroad, I don't think it's for everyone. So in our portfolio, we have about, I think, 5 companies that have expanded into the GCC and are actually doing well and got traction. A couple others attempted it, wasn't the right fit. It really comes down to if there's actually a need for that product. Don't just do it for the sake of it. And so what we saw is that there was a gap. One good thing is that, I'll add on to what my colleagues were saying earlier, Pakistani tech talent is really good. Our people are really strong, intellectually sound, are extremely resilient. And I think it's a combination of Egypt and Pakistan. We have very similar type of structures. A lot of Indian founders now want to go build in India because there's a lot of liquidity in India. And so that's creating a gap. And then domestically within the GCC, there's a shortage of tech talent that's homegrown. So then that's why you're seeing an ability of companies to enter, as well as, you know, obviously the best cream of the crop is going to basically move to the GCC. In our portfolio, the companies that did enter and started getting traction, they're the biggest, the main reason that I was encouraging them is that we have to price in a 10% devaluation going forward as a country. So you're shaving off 10% on your returns roughly, right? So when investors come in, they want to see some sort of protection for that. So if you can dollarize some percentage of your revenue, that's an important element. I won't talk about my portfolio companies too much. I think anyone can Google and look them up. But what I'll say is that something to add on to what everybody was saying. The liquidity is coming into Pakistan, but it's coming in very strategic manners. So you've got existing tech platforms that are expanding in Pakistan. They're doing growth by acquisition. A lot of stealth stuff is happening where millions of dollars have been injected. And some of the incumbent players in particular verticals, they're actually at parity now. But obviously it's private data and under NDA, so you can't disclose it. So think strategically, and it's not about just getting new companies to come in. We also have to take the existing companies that all of us have invested in. We really need like a Series A, Series B type fund, and I think you guys should be considering that. Misbah, I think you and Kulsoom should be entering that space and start to write those checks.
Watch this space, Faisal.
And start writing those checks, right? Because once we have exits and return capital, the whole cycle starts. And lastly, domestic capital has to step up. We can't simply rely on foreign capital. There's a lot of capital locked into pension funds and it's billions of dollars sitting in Pakistan. People have to wake up, can't be old school anymore. Look at the S&P 500 is pretty much big tech. The world is going to tech. Either you invest in your own tech or it's going to be the disruption of the nation state through foreign tech. So we have to it's a precipice.
Okay, before I get thrown off the stage, because we've run out of time, one quick question. We know that in the past, policies of the government have either hindered or helped the startup ecosystem. What are the policies that you would like the government to look at in terms of change so that things will improve? So all of you, I think if any of you have ideas, it would help.
I would say from our standpoint, since we invest in so many different countries, there are many things that the government can do. It was covered earlier today, loosening capital controls, easier access to liquidity. I would say for us, probably on this stage, friendlier rules to establishing onshore venture capital firms.
Yeah.
That always makes it easier for money to come in, for money to be raised locally, and for money to be invested and returned. I think that would probably be my top policy, my top choice. I would just like to say one thing before the panel ends. Today, and a lot of the conferences I attend in Pakistan, the macro is always the overhang that tends to get the mood down. And I can say, as I think the only person here who does not live in Pakistan, Gobi, we are super excited to be here. We've been here for, 5-6 years now. We have 5 people on the ground, me coming in. We are committed here long term because we believe that this country can do, and its people can do fantastic things despite whatever happens on the headlines. And we go around, people look at us and we think, oh, we're the money people, that we're just dishing out the money, it's so easy for us. But it's hard for us too, banging the drum of Pakistan around Europe, around Asia, trying to raise money and selling the story and the dream here. And I was kind of cornered by somebody on the plane who was returning from Malaysia to Pakistan. He's Pakistani. And he said to me, he was like, you're Malaysian? I'm like, yeah. He's like, well, what are you doing in Pakistan? I'm like, investing. What the hell do you think I'm doing? And he said, why do you like Pakistan? And one of my colleagues summed it up pretty well. She said, Pakistan mein mere paise aur dil dono invest ho chuke hain, aur mera pet bhi. So we're here with you all. We're excited to invest more. Please keep building. We're here with you.
Okay, any policy
I can't
changes?
top that.
Let's end at this.
That's a
Drop
great
the
way to
mic.
stop.
Okay, all right. Well, thank you very much, all of you, for sharing your expertise, your knowledge, and your insights. And I hope you guys learned a lot I always do when I listen to these people. So thank you very much. And no, nobody will have to come and throw us off the stage because we are leaving.
Thanks,
Thank you.
yeah, for bringing this up.